This is a revision of Strategic Business Leader for the exam period of March 2020. And this is question 2. We have the part 1, extract from report on summary of investment appraisal of new cloud-based services. Introduction. This section examines the issues collected with the summary which has been prepared and recommends improvements in areas where further detail is required. Net present value calculation. Sales. Having a single sales revenue figure, even if this is a summary, is quite inadequate, and comment about the rise of sales increase is unhelpful. There is no justification for the varying percentage of sales increase. Splitting the figure down by the services offered at the minimum distinguish the revenue from the provision of private cloud services from cloud integration services will give a better picture of how increasing the services offered may lead to revenue increases over time. The assumption about increased client base needs to be linked to how new services are to be marketed, and how much the focus will be on winning new clients as opposed to selling additional services to current clients. TT4U is operating in a very competitive market for cloud services, so any assumptions about being able to increase prices are doubtful. Contribution. If different services are provided, contribution may vary on them. A figure chosen may do as a broad estimate if it is the source gene which TT4U has been generating recently. However, there is no detail about variable costs. This may change over time as the service offer becomes more mature and the cost per client of providing each service falls as a cost. The marketing cost will depend on when new services are introduced. If they are introduced gradually over the 3-year period, the estimates may be reasonable. However, if most of the services are being introduced soon, marketing is likely to peak in year 1. The fixed cost figure appears to be a general estimate. No justification is given as to whether the figure is unchanged over time. In addition, the figure is sufficiently large to need breaking down into different elements and clarifying the assumptions for each element. Tax and working capital. Using the current tax rate is a reasonable assumption if it is not expected to change much in the next few years. However, the figure does not take account of any allowances which may be available on the investment expenditure. It would also be likely that the investment would require some working capital and this needs to be brought into the calculation. Investment. If services are likely to be developed over the next few years, then a single immediate figure for investment at the start will not be realistic. The reliable value given at year 4 lacks justification. It is difficult to see what would be realized and whether it would have any value given the fast-changing nature of the industry. If the net present value figure is extended to year 10, the realizable value should be excluded from the calculation as the investment is not finishing at year 4. Taking the post-tax cash flow at the year 4 and using the multiple of 6 as a basis for the years 5 to 10 has not been justified. The figure used should be discounted at the relevant discount factor for each year, not the discount factor for year 4. It is ultimately, however, questionable whether the investment should be extended to 10 years. as this seems a long period for an investment in fast-changing IT. Discount factor. The discount rate used is incorrect. The weighted average cost of capital should be used if business and financial risks remain at the same levels. This is likely to be higher than the cost of debt, since, since equity has a higher cost than debt, meaning the net present value will be smaller. If either risk changes significantly, a project specific cost of capital should be used. Payback period calculation. The approach taken to calculate the payback period is correct, although the figures may not be reliable due to concerns raised above. Net present value is theoretically the best method to determine whether an investment should be undertaken. However, payback can be used as an initial indication if directors are unconcerned about the time frame over which the investment will be profitable and want to ensure it is recovered quickly. The investment is only marginal outside the payback period, and uncertainties connected with those figures suggest the investment should not necessarily be rejected because it fails to meet the payback criteria- criterion. Sensitivity analysis. The summary is incorrect in saying that sensitivity analysis will show the profitability of making a loss. It will just show the amount by which figures need to change for the investment to make loss. Sensitivity analysis also treats individual figures as independent variables, whereas there may be connections between them. For example, between revenue and marketing expenditure, or same factors may affect more than one variable. For example, competitor response affecting income from more than one service. Scenario analysis showing results under different pessimistic outcomes is likely to be more valuable. Conclusion. The project's failure to meet the payback target period should not by itself lead to the project being rejected. The decision should be primarily based on a revised NPV calculation using the correct cost of capital and reconsidering the assumption. If the revised NPV calculation shows a positive present value for the year 1 to 4 only, the board should consider accepting the project. B. Briefing notes for board meeting. E-meeting. Cloud computing services. The purpose of this note is to discuss ways in which e-marketing can be used to promote the new services. The notes will be a combination of new ideas and methods which TC4U is already using, but should review and may need to enhance. The notes also show how the methods should be used within the framework of attracting and retaining clients. 1. Attracting clients. Reaching potential clients. TC4U may look at whether its search engine positioning needs to be improved. Possibly the launch of new services is a time to make use or more use of methods such as banner advertising. TC4U needs to consider the branding messages the advertising will promote, possibly separately branding the new services from TC4U's existing businesses. Interesting potential clients. TC4U should look to make the most of methods such as tweeting or Facebook pages to promote interest in its new services. Social media postings could cover concerns clients have, for example, about the lack of connectivity between data holdings, which TC4U's new services will address. Social media can also promoted for use expertise by providing opinions or guidance from a director or employee. The information about the new services on TT4U's website needs to indicate clearly the way TT4U services will provide maximization of value for clients and unique selling points which TT4U services have. It needs to show clearly that it is addressing what is of interest to potential client by, for example, providing answers to frequently asked questions about cloud services. Infrastructure issues should be regarded as a priority, as the ability to search the site easily can help keep users interested and prompt them to revisit the website. TT4U then needs to make sure it makes maximum use of the data it has about website visitors to develop its website continuously. The pattern of clicks will have established what particularly interests different visitors. Questionnaires about what visitors are interested in can be used to see how to develop content further. For example, in greater emphasis on data management and hosting. Gaining potential clients. Turning users into clients needs to be focused on using data about what they are interested in to attract them to services offered. A personalized approach focused on opt-in emails and text messages tailored to what is of interest to client is core. These messages need to encourage two-way communication. Not only will that interest clients more, but it will highlight the proactive and collaborative attitudes which the new business approach will be promoting. TT4U can also use media release to target particular groups, for example, clients using certain cloud services. While they are less tailored, they can be used to create interest. They can be followed up by tailored communications to individual clients subsequently. To returning clients, the same emphasis on personalized communication needs to be used for current clients. The focus needs to be on continuous dialogue, more regular client surveys focusing on what they are likely to be most concerned about need to be undertaken. TG4U must remember this personalized approach is not just about what is delivered, but how it is delivered, how proactive TG4U is with its clients. TG4U's website should also help develop relationship with clients by getting them to register or perhaps subscribe to particular content. The website could provide a chat or messages option, as well as TT4U's website other methods which could be developed include news groups and business blogs. News groups would keep clients interested by highlighting new developments with the cloud which are linked to the services which TT4U provides. Providing services which can only be accessed by clients, for example, extranets can also help generate loyalty. Again, it is important that these are tailored to what is important to clients and generate responses from TT4U. TT4U needs to consider how proactive staff are in dealing with client concerns, how quickly they respond when clients contact them, and also how easy it seems to be for them to answer client queries. A business offering IT expertise needs to ensure that the knowledge and awareness which all its staff have to clear to clients. TTFU should also emphasize the existing knowledge. It has the existing client system as a selling point for them. selling points for helping them develop effective cloud computing service offering.